I get a phone call that this lady had a fire in her house, and we rush down there. When we get to her house, we're going over her policy, and she's crying, and she's like, I'm like, I get it. It's a fire. It's devastating, and I'm just there to make her feel better at that moment. And I'm looking over her policy, and I'm looking at this. I see that there's no contents coverage in her policy. She said, I can't believe this. 2 months ago, I called my agent. I asked him if they could lower my coverage, and the first thing he did is said, look, we could remove your contents. She lost all her contents and had to pay out of pocket to replace it.
You are listening to the Insurance Corner podcast. This podcast is presented by Florida Public Adjusting. Tune in to get tips, information, and valuable pieces of advice on how to best handle common problems homeowners face with insurance providers.
Welcome to Insurance Corner. Today's episode, we're going to discuss personal property, contents, electronics, devices, whatever you have that you want to insure. Is it possible to get insurance? And would it be covered in the event of a loss? Typically, when you have a homeowner's policy, we'll start with a homeowner's policy. Typically, when you have a homeowner's policy, you have specific coverages for contents. It typically would fall under coverage C, and it would be labeled as personal property. There are two different types of personal property insurance that you could have when you pull a policy. One of them would be an actual cash value. And what that means is that it is the actual value of the property at the time of the loss. And then you would have a secondary option, which would be replacement cost value, which doesn't matter what condition of it was at the time of the loss. It's how much would it cost to replace it, and that's what you would be owed for. When you're choosing insurance, it would be my suggestion to make sure that when you speak to your agent that you would have a replacement cost value added to your personal property and to your contents, because more often than not, if you go the other route, what happens is you have, let's just say you have a couch, you paid $2,500 for it 10 years ago. If you have an actual cash value on your personal property, they'll depreciate your $2,500 purchase by 10 years, which would be significantly lower when it comes to replacing it. They'll pay you a percentage. They pay you a percentage of what the actual value is at the time of the loss. That's why replacement cost value in any kind of insurance is the best route to go. And you would think that sometimes it's exponentially more expensive to obtain that insurance, but it actually is not. It's usually a few dollars a month, and maybe $100 or $200 extra a year, which in the grand scheme of things, when you suffer this kind of loss, it does. You can't even compare it. So there's no comparison. So having that little extra insurance to make sure it's replacement cost value would make all the difference if you find yourself in a situation where you would actually have to use it. When a house is damaged by a covered loss, and you have property that gets damaged, say you are a photographer and you have expensive equipment, and it gets damaged inside your property, that would typically be covered, and you wouldn't necessarily have to take out an additional insurance for that to be covered. The only thing that you would have to look for in your policy when you purchase it is how much is the value of contents, or how much are you insured for when it comes to your contents. So if you know that you have, music equipment or you have photography equipment, you just want to make sure that you have the correct amount of insurance when it comes to those items. If you have expensive jewelry or watches or fur coats or shoes, that you would want to take out additional insurance for those items in the event that it gets stolen or if it gets damaged at your property. When you do have a property loss, personal property damage, and you need to exercise your insurance, it's very important, and probably the most important thing is to make sure that you can back up what is being lost. So let's just say, for instance, you have replacement cost value on the couch that we just mentioned earlier, and you bought it for $2,500. It would be up to you to prove that $2,500 was actually spent in order for it to get reimbursed. So saving receipts, is very it's imperative, it's important. It's something that will help you in the future in the event that you are going to have to use your insurance for your personal property, and it will make all the difference when going through the claims process. Electronics typically would be covered under your personal property unless it gets stolen from somewhere outside your property. Say you have a laptop and you travel for work, and you put it into the rental car, and then the rental car gets broken into, and then they steal your laptop. You are insured under your homeowner's policy up to, I think, roughly $1,000 to get that replaced. And I actually had a friend that went through a situation. He was in Italy. They broke into the car, stole his suitcases, and he was covered for his personal property that was outside of his house, which is something to know, because a lot of homeowners wouldn't think that, it wouldn't even cross their mind. So he was able to exercise it. He got some of the money back, and it helped with repurchasing whatever he lost. If you have expensive equipment that you take with you to work, you would have to take out a different insurance for those specific items, so that you would have extra coverage, because your homeowner's policy will cover up to $1,000, and then your other insurance will cover the rest. Whatever insurance you take out per the item that you want to insure, which is important if you have $10,000 worth of equipment that you travel with on a daily basis. At one time, we were traveling with a ton of equipment, which was also an excess of about between like $5,000 to $10,000 in equipment. And we took out a special policy because we had to check everything in, and you never know what happens. And by the time the airlines kick in, it's not worth it. I'd rather just take out peace of mind to have additional insurance on some of that equipment. Thank God we never had to use it, but we knew we were able to sleep better at night when we were on the road, knowing that we had it insured, which I think is the purpose of insurance: peace of mind. People have, if you have expensive watches, that is something that you could insure. You insure it separately. And I had a friend that he was wearing his Rolex. He went to the gym, and he left his Rolex in the cup holder. Called his insurance right away, and they replaced it. They paid the full replacement cost value of it, which was about $25,000, and he was fully reimbursed, no questions asked. I don't know if he was able to get additional insurance after that, but at least when he had that issue at the time, he got it covered, and he was good. So that's just an example of, if you do, if you're able to buy that kind of jewelry, or watches, or whatever it is that you could afford to spend money on, spending the extra dollars to make sure that it's safe and secure could make all the difference when you do need it. If it's something that you could afford, I highly advise that you take advantage of that and make sure that your agent applies it to your property. And then above that is also making sure that you have replacement cost value on your contents. Unfortunately, when you go through insurance claims, carriers make it difficult. That's why you have a public adjuster, to make your life easier so that you don't have to go through the process alone. But at the end of the day, having it insured is important. Floater insurance is specifically geared to cover your equipment or your fur coats. Well, I say fur because it's a fur float. There is different floaters. One of them is geared towards fine arts and clothing and furs and jewelry. So those are all additional insurances that you would purchase. For instance, if you're a plumber and you have expensive equipment, and your truck gets stolen, you are covered if you have insurance for those specific tools that you choose to insure at the time. When you have equipment in a doctor's office, it's pretty expensive, and that each equipment should be separately covered under a different insurance. So the practice should have their own insurance, not only for the betterments and improvements they did for the interior and design of the actual offices that they have, but also for a separate one for their equipment, which is very important. I unfortunately have been involved with claims for dental practices where they didn't take out insurance for their dental equipment, and it was a disaster. They ended up having to lose and replace a bunch of equipment on their own, which is not advisable, because at the end of the day, if you could get it insured, and if it has value, and it's something that again, insurance is for the unknown. It's for worst case scenario. You never want to have to use it, but in the event that you have to use it, it's a peace of mind that you have it, so that you can exercise it when you need it, so you don't lose any business time, and you can get back up and running in a timely manner. If you got hurt on your own property, you're not covered. You'd be covered under, if you had a medical emergency in your property, then you'd probably just have your medical insurance. However, if somebody gets hurt in your property, if someone slips and falls in your house, breaks their leg, then they are covered under your homeowner's insurance if you have liability coverage, which most policies offer. I think there was a famous, I can't remember the exact details of the story, but I remember when I was a kid, I heard a story of a child that was on a swing in their backyard, and this child fell, broke her arm or something, and then she ended up suing her parents' insurance and getting coverage. I think that's why they changed the policy language after that. But if I'm not mistaken, she prevailed and she got a claim out of it. I think it's only for if somebody comes to your property, steps on your property, or is doing work on your property and they injure themselves, then you would have insurance. They would be covered under liability on your homeowner's insurance. I got a phone call that this lady had a fire in her house, and we rushed down there. She filed the insurance claim on her own. When we get to her house, we're going over her policy, and she's crying, and she's like, I'm like, I get it. It's a fire. It's devastating. And I'm just there to make her feel better at that moment. And I'm looking over a policy, and I'm looking at this. I see that there's no contents coverage in her policy. And I asked her about it, and she said, I can't believe this. 2 months ago, I called my agent. I couldn't, the payments were getting too high. It was getting too crazy. So what I did was I told them I asked him if they could lower my coverage. And the first thing he did is said, look, we could remove your contents. And I did that 2 months ago. And I don't know what to do now, because it was a devastating fire. We ended up getting her the policy limits plus the ordinance and law, but she lost all her contents and had to pay out of pocket to replace it. So it's super important if you do have a property and you do have insurance, and make sure that you have coverage for it, because you don't want to end up like that with no coverage and no contents. However, there was something interesting that happened with that claim. Not everybody would know that there is also different coverage that you have, and this is not going on to contents, but it's for ordinance and law. So ordinance and law coverage is up to about 25%, roughly 25% of coverage A, which is how much they would pay for your dwelling in the event of a total loss. But ordinance and law, what that means is that the insurance company would pay to up to 25% of that policy to bring the house up to code. So that house happened to be a total loss. Not originally. The insurance company underpaid it. When we ended up fighting it, we got her reimbursed for the total loss, which it was, that the insurance company did not want to acknowledge at the time. But over and above that, we got her the additional 25%, which I think was roughly about $50,000 in addition to her coverage A, because of the code upgrades that she needed to bring her home up to code. It could be very easily missed if you don't know what you're doing, and they're not going to come out and just pay for it, because it needs to be proved. The documentation needs to be provided, and it has to be done in the correct manner in order for the insurance carrier to pay. Without me present, without myself and the help of my team, she would have lost. She wouldn't have, number one, gotten into the policy limits, which the insurance company already intended not to give her. But on top of it, the ordinance and law coverage was an additional $50,000 that was in the policy that we were able to recover on top of whatever her coverage A was. So it was super important that we were present. We did the right thing for her. We helped her. We walked through the entire process with her, made her feel when a person goes through that, it's a daunting process because they just lost everything. So having that extra shoulder to rely on was, I think, one of the most important things, aside from just the upside on the monetary value. But just having us there for her made her feel comfortable and confident that she was going to be okay. We're in Hollywood, Florida. The offices of Florida Public Adjusting is in Hollywood, Florida, our main office. And we have a restaurant down the block where they had a disgruntled employee that came in one day, smashed the windows, took wine bottles, started smashing it through the TVs, damaged the contents, damaged the POS systems. She was nuts. I saw the video footage. It was unhinged, crazy. People were afraid for their lives. Diners were sitting inside at the time. It was, if you watch the video, you're like, okay, this is out of a horror movie. But we were able to, in this particular case, their insurance that they had for their that they were covered for in the restaurant was for the contents inside. So they didn't have betterments and improvements, so whatever work they did to the interior was not covered. However, all the contents were. That means the tables, the chairs, the POS systems, the televisions that got damaged, anything that was their personal property that they purchased for the restaurant was covered, and we got them reimbursed. And so they're much happier. I think they have a restraining order against that person. So it ended up being a happy story. However, the glass window that was shattered, they paid out of pocket because it was not their insurance company's responsibility to cover it. Also, any of the painting that they had to do to the walls was also fell under their own out-of-pocket costs, which you do have insurance for that. And I think it's very important to purchase it if you own a space that you will be occupying for a while and you're doing betterments and improvements to the property. Then having that additional insurance to make sure whatever work you did, say you spent $50,000 to make, to add walls or to paint or to add flooring, you name it, if it's something that you put money into the place, then there is special insurance that you could purchase for that. And in this particular case, it would have been beneficial for them to have had that insurance when this took place. With this particular restaurant, if they had to close to get their POS systems back up and running, and they did lose business, so typically you would have a loss of income insurance. I don't know. We didn't file any loss of income for this particular client. However, there is insurance for that, and typically you would have a deductible, but it's calculated a little bit different. It's calculated, I think, between 24 to 48 hours after. So they won't pay for the first 2 days. That's the deductible. So if you make, let's just say you make $10,000 a day, and you lost a week, 7 days, they'll only pay you for 5 days. So that's typically how loss of business would be calculated with a deductible. So collectibles, if you have like a coin collection or a stamp collection, some of these collections could be very costly. A basketball card collection, baseball, cricket, footy, whatever sport you're into. If you do have a collection that's worth value, it is worth insuring that, and it's a separate insurance that you would apply for, or you would cover outside of your regular homeowner's insurance. So if you're renting, you're a tenant, and you have your furniture. It's you furnish the house and where you're living, and you have your own contents. You have your own, say, even your own appliances that you decide to put into the place that you're renting from. You could take out a renter's policy, which would cover your property. So that's exactly what it covers. It covers your property, and we've helped a lot of people that had issues when their house flooded, whether it was an apartment from the apartment upstairs or the actual house flooded or a fire or whatever it was. they had renter's insurance, and we were able to get their contents and whatever their belongings that they had in the property at the time that were damaged by whatever the cause was. We got that reimbursed for them. I know a few building managers that they run a few hundred units in various different buildings throughout South Florida, and they don't allow tenants to come in without renter's insurance, and they do it purposely because at the end of the day it protects the tenant if there is an issue, and at the same time, if something happens, they can't blame it on somebody else. It's your responsibility to have your insurance. A big, also not even regarding content itself, but even just on a condo, if you purchase a condo, mortgage companies wouldn't necessarily make you or force you. I think maybe today might be different, but for a long time you didn't need insurance for your unit, and if something happened, it would be your responsibility, which was a big problem, because if you have a suite and a building on the beach and something happens, you can't go and start pointing fingers, because at the end of the day, you have insurance for your place. Even if it was somebody's responsibility, the burden of proof is exhausting. By the time you actually get anywhere with the other person's insurance, it's just not worth it. We turn away a lot of claims from people that don't have insurance on their units, and they had an issue from the tenant upstairs, and now they want to go after their liability insurance, which poses another question. Liability insurance from, say, I'm just going to use the example of a unit upstairs again, only comes into play if the owner of the unit upstairs was negligent in fixing whatever was causing the issue. So if a pipe suddenly bursts and the water comes down into your unit, their insurance doesn't owe for that, because it was a sudden and accidental occurrence. The only way that their insurance would have to be liable to pay for that is only if they neglected the issue long enough for that issue to cause damage to your unit. So a lot of the time, if you have a unit or you have an apartment in a building, and you would expect the person from upstairs, their insurance to cover whatever damages occurred, and it was a sudden accidental loss, they don't owe you anything. You could go after the homeowner himself, but good luck. It's not even, nobody will even listen to the case. I'll listen, but there's nothing I can do for you. But attorneys, people are like, I'm going to sue them. No, you're not suing anybody, because no attorney will take the file. It's not worth it. So get insurance. If you have expensive jewelry or watches or fur coats or shoes that you would want to take out additional insurance, you have the ability to do so. Everything when we discussed in contents would be if it's something that you want to insure above and beyond what your regular homeowner's insurance or property insurance would cover, you would typically take out a floater, which would be an additional insurance to whatever contents or equipment that you want to insure. Floater insurance is specifically geared to cover your equipment or your fur coats. When I say fur, because it's a fur float. There is different floaters. One of them is geared towards fine arts and clothing and furs and jewelry. So those are all additional insurances that you would purchase. For instance, if you're a plumber and you have expensive equipment and your truck gets stolen, you are covered if you have insurance for those specific tools that you choose to insure at the time. Sometimes people forget, and they think that anything that happens to their property would be covered, even if they do not look after their property. It's your responsibility as a homeowner, as an individual, to look after and maintain the place of your living. It's just something to do. I don't know. It's like you're talking to people. We go to a lot of homes where unfortunately they don't, and it's an issue because there's no coverage. It's and then they argue and they fight, but meanwhile they could have avoided the issue if they would have just done the right thing and maintained their house or their property. Thank you for joining us on this episode of Insurance Corner. We hope that these tips help you in the future. And as always, Florida Public Adjusting is here for you, and we will see you on the next one.